This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Kiwi, Aussie, Euro dollar, and the dollar yen. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar, and this is the channel that I have been using for the past 11 or 12 reports now. Prices did break beneath the lower support line, and then this pattern, as I was mentioning during my previous reports, I was expecting a downside resolution, and that's what we have had. And yesterday I was mentioning how we might take the remainder of our profits, then look for another slight rally higher, and then a move to new lows. And that's exactly what has occurred. All previous reports are located directly above this video if you're viewing this on the DailyFX forum, if you want to review those. So right now, moving forward, as I mentioned, if prices were to come down and make a new slight low, at that point, we might consider that the C wave has been complete. So what we could do now is look for and take shots at long trades here. Now, what do I mean by take shots? That means that if we find favorable risk to reward conditions, we might enter with a very tight stop. The reason why I would use a tight stop is because, at least in the short term, the trend has been straight down. So we don't want to be caught in that downtrend, but that doesn't mean that we can't participate as long as we can pinpoint areas of entry where our risk is very low. And right now the market is making reaching one of those areas. So if I can highlight this low here, 53.87 prices right now, 53.99. So that's what I mean by taking a shot at a long trade here on the assumption that there's a possibility that the C wave could be complete. And the reason why I'm saying to take a shot is that we might expect to be stopped out on this trade, but again, the risk is very small and the upside is tremendous. So that's the thing to keep in mind moving forward. Look for similar situations that we have right now, where on the hourly chart at least there's a short-term support line. So that's what I would suggest for this pair moving forward. The next chart is the Aussie dollar, and not much has changed here. As I mentioned during yesterday's report, I was saying that we might look for a move back to the former resistance line, the former support line, which might now act as resistance, and that is what has occurred here. However, prices did not get very close to that line in terms of setting up a favorable risk to reward entry, so you might have missed out on this trade, but that's okay. For the next few days we can go ahead and keep this line up there and look for another move up to that previous support line, which might now act as resistance. The next chart is the Euro dollar, and that is that 61.8 fib level that I was mentioning yesterday. We did have another daily close beneath that level, so I'm not as bullish as I might have been certainly had we closed above that fib level. So moving to the 60-minute chart, these are the support and resistance lines that I added to yesterday's report. So again, we might just wait for prices to come down and hit that lower support line. We might look to enter just above that line with a stop maybe 50 pips or so beneath it, but certainly keep your eye on this, and to reiterate, as I mentioned before, I'm a lot less bullish here, at least in the very short term, only because that longer term daily fib level did not hold. The last chart is the dollar yen, and not much has changed here in terms of this resistance line. Prices did break out above it, but then it did fail on the backside. So again, with this pair, I'm looking at the shorter term charts, looking for trade entries, but I just simply can't find any right now. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.